having had any requests, though, although we do have a number of members of the Pensions Board observing. This meeting will not be broadcast live. However, a recording will be made available as soon as possible after the meeting has concluded. As ever, we welcome the use of the Welsh language at meetings. However, I've had no requests for people to speak Welsh today, so the meeting will be conducted in English only. Please can members attending via Microsoft Teams refrain from using the chat function and instead use the raised hand icon to indicate when you want to speak. Please remember to keep your microphone muted when you are not talking. If that all makes sense, I'll move on to the agenda. So item number 1 is attendance and apologies, and for that I'll hand over to Geraint.
Thank you, Chair. We've got apologies from Councillor David Williams.
I don't suppose Councillor Tew has given either John Haller or Councillor Gordon his apologies, has he?
No.
No. Okay, fantastic. All right, thank you very much. Moving on to item number 2, declarations of interest. Geraint.
Yep, thank you, Chair. I'll just read through what we've got down for the declarations. If you could just tell me whether or not they're correct, please. If I can start with yourself, Councillor Best. I've got that you're not in receipt of a pension and you're not a contributor either, none of your family.
Yeah, that's correct.
Okay, thank you. Councillor Gordon, I've got that you're a contributor, your wife's a contributor, and so are your stepdaughter and your stepdaughter's partner.
That's correct.
And I've also got that you'd like to declare personal interest due to your work as a Unison official.
Yeah, that's correct also.
Okay, thank you very much. Councillor Haller, I've got that you're a contributor.
That's correct.
Thank you. No Councillor Tew or Williams. And Chair, I've got that your father and 2 other family members are in receipt of pension and you are a contributor.
Correct.
Thank you. That's everything.
Thank you very much, Geraint. Item number 3, we have minutes of the Pensions Committee on the 30th of March 2023, which starts on page 5 of the pack. So this is for members to raise any issues or matters arising from the minutes, and then we can agree them. So, chaps, anything in the minutes you want to discuss? Councillor Best, Alfie is a new member. Did it all make sense? Oh, well, you're ahead of the rest of us already then. In which case, if everyone's happy to agree those minutes, we move on to item number 4. Yep. Right, item number 4, again, this is for information only. These are the draft minutes of the Pension Board meeting of the 26th of April 2023, and these start on page 19. These are for noting only, but if there are any questions that have arisen for any members, or if there's anything, actually, as we have some colleagues here from the Pensions Board, if there's anything either of you would wish to clarify, I'm happy to take that now at the beginning of the meeting. Any questions? Any points of clarification? Okay, fantastic. In which case, thank you very much. Item number 5, I've got down here, welcome and introduction to new members. I thought it would make sense at the beginning of this meeting, actually, just to press a slight reset button and go around the table and introduce everybody, and also have a conversation about what the Pension Committee is here for and actually what we're trying to achieve over the next 12 months. We have 2 new members of the committee this year. We've got Councillor Alfie Best, who will introduce himself in due course when we go around the table. We've also got Councillor Chris Tew, who is, I think he's from the independent group of Torvine, or it could be the Torvine Independent Group, and he's a councillor up in Abersacan. Councillor Nick Simons, who was on the committee last year, has come off the committee, so if we could possibly minute and note our appreciation for all the hard work he did on the committee last year, Geraint, that would be appreciated. So essentially, quickly, what the committee is here for, and I'll look at you directly now, Alfie, as you are the only new member here. So essentially, the Torvine Pensions Committee is the administering democratic organisation for the wider Greater Gwent Pension Fund. So after the reorganisation of Gwent County Council into the constituent unitary authorities in the mid-1990s, Torvine, it was agreed, would become the administering authority for what was then the old Gwent County Council Local Government Pension Fund. Since then, Caerphilly, which when it was created was half of the Glamorgan, was part of Glamorgan Park Gwent, is now fully into this scheme, which is why we become the Greater Gwent scheme fund rather. There are more than just the local authorities in membership of the fund. I think Alex might talk through some of that later on in terms of the issues around who we talk to. But there are a number of housing associations and other public sector bodies, including some of the FE fund, the FE pensions in with us, aren't they? FE? Further education. Yeah. So actually, I think it's more than just us, but that's an important thing. The main reason for having the committee here is to have democratic oversight of the running of the committee and to make sure that the decisions we have to make regarding investments are taken appropriately and that there is that democratic mandate going back and forth. It's actually quite an interesting committee, which I was one of the reasons I wanted to get you on here, that actually we'll be talking much more about investment strategies and how where the council sits in and what we can do for the greater good of people across the greater Gwent region. I'm sure that I've missed something, and I'll wait for Alex to talk us through that when we go around the table. So what I'm going to suggest now is if we go around the table and everyone introduce themselves and why they're here and maybe any thoughts they have about the fund that might be useful for Alfie and Councillor Tew if he watches this back to find out. So I'll start with the gentleman to my right.
Yeah, good morning, Councillor Best, and to all other councillors and those who've joined online as well. My name's Alex Bull. I'm the head of the pension fund. Broadly, I've got responsibility for all activities, which includes the administration, obviously the investment and the finance aspects and the governance. And obviously, we've got wide support to support those areas. I think predominantly my role is focused on, as the Chair said, delivering on the investment strategy as agreed by the members. Typically, the strategy is looked at in detail every 3 years following a funding strategy review. We've just undergone that funding strategy review, and now, hence, that the work is underway. I probably won't talk too much about that process here now. There's an item, the next item on the agenda covers where we are with that investment strategy review, and happy to take questions, and equally happy to offer an additional conversation or some training outside of the meeting if it's helpful. That's probably it, unless there's anything else.
No, that's fine. If we carry on moving around the table in that direction.
Good morning all, my name is Lewis Gray. I am the Graduate Pensions Officer. My role is basically to assist Alex, the Head of Pensions, sort of with an oversight role with regards to the governance aspects of responsible investment and generally just investment performance.
Yeah, and I'm Elizabeth Carey, my nickname is Betty, so don't be confused. I am the independent research analyst and I work really closely with Alex and Lewis and to try to develop a lot of the investment side things. There's a report I wrote at the back of this private document section. I've spent many, many years in investment banking and then also working for in-house in mergers and acquisitions before I discovered the world of LGPS pensions. And now I work independently, as the name suggests.
I'm Nigel Aurelius, Deputy Chief Exec to the Council and the Treasurer of the Council, known as the Section 151 Officer, and I'm also the Section 151 Officer for the Pension Fund, so I have overall responsibility for the financial stuff within the Pension Fund.
Good morning, I'm Ian Coleman, I'm the Independent Chair of the Local Pension Board. And our role as the board is to support Nigel and Alex and Joe in delivering the administration of the pension fund.
I'm Anthea Wellington. I sit on the pension board as ex-employee and represent Unison.
Alfie Best. I'm from Pontrywen International Ward. I've been a councillor just over a year and lead to the pension committee today.
Geraint Thomas from Democratic Services, responsible for making sure that the agenda is published for the Pensions Committee and board meetings and taking the minutes in those meetings, and with Pensions Committee making sure that we record it and put it up on YouTube in due course.
Hi, I'm Jo Griffiths. I'm the pensions manager, so I'm responsible for looking after the pension administration of the team, putting pensions into payments, paying our pensioners, and processing all types of benefits.
Thank you, Joanne. So we move on to line. I think I'll take John, Carl, and then Ethan, and then actually John, Wrights, and Lisa. If you'd like to introduce yourselves as well, that'd be great.
I'm John Hawler. I'm the ward member for Trevethin and Pennygarn. In a previous incarnation, I worked in the Borough Treasurer's Department and Her Majesty's Inspector of Taxes, which probably explains why I ended up on this gig. And that's me.
Yeah, Chair Carl Gordon, ward member for Llanfecwyr and Pontier, member of the Pensions Committee for just over a year.
Hi, Ethan Devitt. I'm independent advisor to the Pensions Fund Committee. Slightly similar to Betty, but different in that I work more on the asset allocation side and on the function of this committee and looking at the macro backdrop and how that relates to asset allocation and other bigger picture issues. I also work with 3 other pension funds, Lancashire County Council, Berkshire County Council and South Yorkshire County Council. Unfortunately, I can't be with you today. I'm right between 2 graduations of 2 of my daughters. So one was yesterday and the other is today. So there's mandatory attendance at that, but delighted to join here remotely.
Hi, I'm Lisa Pierce. I'm working in the investment team, mainly doing the investment accounting. So nice to meet you.
Thank you all. So John Wright, that is, you there?
Yes. Yes, can you hear me?
Yep, we can see you as well.
Yeah. Okay, fine. I'm John Wright. I'm a employee side of the local pension board and I represent Unison Blaenau Council.
Excellent. Thank you very much, everyone, for your patience in doing that. Just before we move on with the agenda, just to flag up, I've spoken to both Alex and Joanne, and I've asked them when each item comes up that we actually have a bit of a primer about what that item is, so actually it's not chucking Alfie completely into the deep end. And also, I think it's probably quite good for the rest of the members to have that a bit of a debrief and a primer on some of the information. The other thing I would ask everybody potentially to de-jargonise for this meeting at least, so actually we can get up to speed and talk through what we mean. So, for example, I've asked Alex when it comes to it to actually give a bit of a brief explanation of the asset classes that we are investing in, instead of expecting that Alfie and some of the other members, including me occasionally, I hasten to add, are completely up to speed with everything we're confronted with. So, with no further ado, then that's item number 5 sorted out. I'll move over to the first substantive item on the agenda is item number 6, which is the investment strategy update, which starts on page 33 of the reports pack. And for this, over to Alex.
Yeah, thank you, Chair. And as I just sort of mentioned in the prior item, I sort of see this as one of the major functions of the Pensions Committee in terms of not only setting the investment strategy, but then sort of holding the officers to account, if you like, in terms of delivering that over the long term. And so I think just in the spirit of taking this back a step, that the fund is subject to a statutory triannual funding approach, which is the valuation. Essentially, that's a health check on the fund's assets and liabilities to determine whether or not there's sufficient assets there to pay those benefits. Ultimately, the primary role of the pension scheme is to pay benefits. We are a funded scheme, which differs from many others, even in the public sector, whereby we have assets available to pay those benefits. So we kind of tend our own patch and stand on our own feet, if you like. Obviously, the major responsibility in terms of funding those liabilities is to have an investment strategy that takes an appropriate level of risk, that delivers a level of return that is sufficient and that can sort of be sustainable in the long term. We call it triennial. Obviously, the funding approach is every 3 years. We've just gone through that review, which was the valuation date was the 31st of March 2022. And what that is determined ultimately is a substantially improved funding level. That means that we now have we're 97% funded, so there's almost enough assets as we were at the 31st of March available to pay those benefits if the fund was to cease at that date. Clearly, in reality, that isn't the case. We're a long-term open scheme, which means that new members can join across the 58 employees we've got. We've got 60,000 members, so this is a long-term operation. But ultimately, the regulations require us to draw a line in the sand every 3 years and take an assessment of where we are. So as I said, the funding level improvement to 97% represents a substantial improvement, and I think that's largely to the credit of the Pensions Committee in terms of historical decisions around where we should invest. And actually, and I'll come to this a little bit further into this item, that the investment returns is the single-handed biggest factor that has contributed to that improved funding level. So we've got sort of two sides to this in terms of that the investment assets are there to deliver the strong returns and support the other part of the inflow, which is contributions. So as a member of the scheme, we pay contributions, but also our employer does also. Across the board, those 57 employers all pay their own rate of contributions, which is assessed independently by the actuary, which is the professional body that carries out this work. As the Chair said at the start, although not the only employers, the 5 local authorities in Gwent make up a substantial proportion of that and are paying typically 25 to 30% of their annual payroll in its contributions. One of the primary objectives of the committee through the investment strategy, but also as officers, my primary responsibility is to try and reduce the impact that 30% payroll contribution has on the local authorities. That's obviously, if they could divert that funding elsewhere to manage frontline services, that would be a priority. So that's we're consciously aware of that responsibility, but equally mindful that we are exposed to investment markets that go down as well as up, and so we need to balance that risk and responsibility over the long term to make sure that we don't harm the funding level and therefore put more upward pressure on those contributions. So I think that's really the sort of the purpose of the funding and investment strategy and how they're interlinked. Worth saying, and for some of the members that aren't on their first meeting today, we did a bit of a detailed training session following the March meeting. And I'd be happy to rerun that outside of this meeting for anyone that would benefit from it again, given that it's perhaps more timely now. I think the purpose of the report today that you can see here, starting on page 33 of your papers, is really to bring into the public arena, into the committee's agenda, the work that's been going on over the last couple of months, and it reflects on, as I say, that valuation process that took place throughout 2022 and 23. At the top of the page, the key messages, there's a table there which basically sets out the strategic asset allocation. And actually, I'll just take it back one step. So the investment strategy is essentially a policy around how the fund will invest. That considers things like risk return, the length of time that we'll invest, currency, geographies and where we would invest, etc. But within the investment strategy approach, there's a specific section around strategic asset allocation. And that's essentially the decision that we make in terms of where we allocate the funds, circa 4 billion, so about £3.8 billion of fund. And those percentages in the table that is set out in paragraph 3.2 is what was agreed in 2019. That was the last time we carried out one of these reviews. Clearly now we're moving into the next review phase of that. And Ethan, the fund's independent advisor, did just touch on the fact that strategic asset allocation is one of the responsibilities, and together with the work that Betty does, we're looking at that now as part of this work. So I'll move into that in a second. I think just taking the Chair's point around what does each of these asset classes mean, I've actually sort of put some rationale in the table, but you can see that we're dominant. The portfolio is dominated by equity investments, so essentially stocks and shares into underlying companies. We don't necessarily get that exposure by buying those companies directly. Have what we call a pooled investment, which is sort of pretty much as it says, it's a pool of those stocks and shares, and we buy the unit over the top. So our investments are exposed to all parts of the global market. As you can see, we've got global investments, which essentially means we'll invest in all of those markets. But then there are some more specific and regional investments in the UK, emerging markets, and Asia, which is excluding Japan. So as you can see, that's the dominant proportion of the fund's allocation, and historically that has always been the case, or to my knowledge has been the case, and that's actually, that 56% figure has come down quite considerably from what was agreed in prior cycles or investment reviews, where that was closer to 70 or in excess of 70%. So that reflected the fact that the funding level has improved, and we're moving more towards the long-term target And actually what we're trying to do as part of that review is explore ways that we can manage our risk and still generate the strong returns to improve the funding level, but without as much market volatility. And the way in which we tried to manage that challenge in 2019 was to increase our exposure to the private market alternatives. And so you can sort of see that's a big proportion of the overall allocation, and I'll touch on that in a second. I think what also has always existed in investment portfolios such as ourselves and big institutional investors is a fixed income portfolio. Typically, this is your more low risk, long-term, government-backed sort of investment approach, I suppose. And that's sort of the global government bonds of things like treasuries. And then you can also, sort of global credit exposure to corporates as well. So the fund has got a 10% allocation to those two areas. It does play a significant role in terms of managing volatility. It also is a diversifier away from the risky exposure that we may typically expect from equities. But in return, the return expectations are dampened down as well. That's what we would refer to more as our protection assets in the portfolio. Last year was a particularly challenging year for for all asset classes, but fixed income was really challenged for a number of reasons, and we'll get to some of that later in the agenda. But I think, nevertheless, there's a part for that to play. Multi-asset is essentially a combination of equities, fixed income. You can also have exposure to some of the private markets, like real estate infrastructure, cash. It also has some more of the tactical derivatives, we call them, sort of exposure to fixed to foreign exchange interest rates and the like. As you're aware, this committee meets quarterly, and so any decision to change the investment strategy is not particularly dynamic in a world where investment markets operate daily and even more frequently with volatility. Within multi-asset, the underlying investment managers that the fund appoints are able to tactically diversify and tactically move the portfolio around much more nimbly than we could as a committee. And so there's a real part for that strategy to play in terms of protecting the fund in periods of downturn markets, but also to try and benefit from a market rally as such. The final point is the private market alternatives. I sort of link this back to the equity, the piece that I made at the start. I think the intention of the committee, following advice in 2019, was that there is potential to achieve the growth-like returns that equities have delivered through the asset classes touched on below. But as these are sort of unlisted, they're not so exposed or not as directly exposed to some of the big macro events that we've seen, which can move the portfolio, the volatility of markets. So things like COVID is a big example. Hopefully some of those areas are familiar, but within infrastructure, this is essentially the assets of things like toll roads. That they would be also in the environmental space, wind farms, solar, battery storage, that sort of asset. They typically are government-backed assets. They have long-term income that the fund would benefit from. Obviously, there's a big push at the moment politically for institutional investment and capital to flow into infrastructure products that can improve what we already have, things like rail, as an example. So the fund made an allocation of around 10% to infrastructure, and said there's more detail about what we're doing in that space later on the agenda, and I'm happy to touch on that in more detail if needed. Private credit is essentially, also known as private debt, is essentially it's helping to finance, or it's helping privately listed companies finance their operations where they can't get access to bank or traditional finance capital. And there's a detailed item at the end of this agenda today that will consider an investment in that, and you'll get to see the range of opportunities in that area. And real estate is essentially property, typically commercial property that we invest in, and actually the fund's exposure is entirely a UK property approach. There is a view that we may look at a more global offering at some stage in the future, but essentially that would cover things like office and retail warehouses, shopping centres, and the like. The final point is cash, which is obviously, as it says, just manage enough of our. We hold enough cash to maintain our day-to-day operations, essentially, which is 1% of the scheme.
If you hold there a second. Was there anything there that any questions about? You've absorbed it all? Then you'll be the best person on this committee in about 3 months straight. Okay, fine. So if there is anything, Alfie, or indeed anybody else, just flag it up and we can ask Alex to explain a bit more detail. But with that, on to page 34.
Sure. I think I can move through this a little bit more generally now we've covered some of those basics. But essentially, as I said, at the last valuation point, a number of assumptions were made by the actuary. So this is on the forward-looking basis what the fund's investments need to deliver in order to, one, keep pace with the liabilities that we expect to have to pay in the long term or what are building up in the scheme. As I said, we're an open scheme, so there's assumptions made about the fact that there will be new joiners and people joining today that will be entitled to pensions in decades to come. So what the actuary essentially said was the fund needs to deliver a 4% return. That would keep pace with the liabilities, but also be mindful that we have a funding shortfall. So essentially we need to achieve more than 4%, or we should be striving towards that in order to shut that funding gap, and also then to alleviate some of the pressure on the employers that are paying in contributions. Pleasingly, paragraph 3.4 touches on the fact that over the last 3 years to 31st of March 22, the fund delivered more like a 9% annualised return, so substantially ahead of what was assumed. That contributed to, in cash terms, nearly 500 million, 466 million improvement in the funding level. That is the biggest proportion of that move from an 86% funded scheme to 97% as of March. Obviously, we've moved on since the 31st of March 2022. We had the war in Ukraine. We've also had challenges closer to home with cost of living, inflationary pressures. The mini budget also had a big impact on market volatility, and obviously then the fund is not immune to that either. So the point 3.5 is just making that actually from the 22 position, the fund delivered almost a flat return last year, which in comparison to some of the major market indices, I've referenced equities there, which is not necessarily representative of the whole scheme, but it's just designed to show that the asset mix I talked about on the prior page is intended to try and diversify and spread our risk so that we're not completely exposed to those peaks and troughs. And I think the final point I'm just trying to make there is that this is a long-term operation. Even though we set the strategy over 3 years, it's more of an evolutionary review and change. I'd like to think of it. I wouldn't expect us to be making huge sort of moves in our approach, just to reflect market conditions there and then. I think we're trying to take a longer-term view, but also reflect what we know in the short term. Section 4 of the report really just updates the members on where we are since the last review. I don't think I need to go through all of the details here, but essentially the approach is that we will we're carrying out a review of the strategy using some external support as well as the help of our advisors. That review will look at what the fund should invest in, and I've moved to page 35, but also how the fund should look to invest in the longer term. So it's thinking about the asset allocation as well as the purpose of those asset classes I touched on earlier in the report. The work that was done in 31st of March 2022, which was the most recent triennial evaluation, and this is obviously taking account of the fact that the market has changed quite considerably in the last 3 years. The long-term assumption from the actuary has increased, albeit relatively marginally, to 4.3% per annum. That's the new sort of minimum target, if you like, that the fund's investments needs to deliver to keep us on track to manage to fund those liabilities. Clearly, our appetite will be to increase that 5%, perhaps 5.5% should be the target in terms of being able to reduce that longer term. To support this work, the fund has commissioned what's called a capital market assumption model. So this is really where, through the use of data, some advisors can basically model our existing portfolio against and take into account a number of conditions and eventualities, I suppose, in terms of what that could deliver. It's really just a bit of an acid test to see whether or not that can deliver in the long term. There are caveats with this modelling, as there often is. There's a lot of assumption work that's being made. So we'll just have to see what comes from that. But I think, if nothing else, it just helps us to give an indication of whether or not our asset allocation, as it is, it remains appropriate. that should be the sort of starting point to determine whether or not we need to make any amendments. I think 4.5, so this is the bottom of page 35 into 36, this is now covering some of the specific themes that we're thinking about as part of this strategy review. I touched on a lot of these in detail as part of that training I talked about following the March meeting, and again, it would be helpful perhaps to revisit that at some stage. Some of them I've already touched on here. Improved funding position. We're not 100% funded yet, and in fact, there's lots of sort of discussion and rhetoric that suggests that maybe 110% or 115% may be more of a sustainable level than 100. So clearly we have seen improvements, but that doesn't mean we can afford necessarily to take foot off the gas and sort of assume that the job is almost done as such. We still need that in excess of 4.3% return that the actuary has made. Higher inflation, we're obviously thinking about what the impact that might have on the fund's ability to deliver the investment returns in the long term. That's something I think the capital markets assumption work will help us to inform, but also the views of our advisors around what they're seeing in terms of opportunities and what they think is appropriate. I mentioned fixed income earlier in the report as a sort of protection asset bucket, if you like, 10% of the fund. We've historically had quite traditional fixed income type investments with global government bonds and debt in corporations, which is typically very high quality debt. There are other opportunities through other avenues we have where we could maybe look at sort of some absolute return type strategies which may perform better in the market. But again, it's taking that shorter term view on the asset class as a whole, but also what that might look like long term. I'm sure you'll be aware, obviously, there's a climate challenge, climate emergency, and Torfaen Council has declared, alongside a lot of other local authorities, a climate emergency. It's fair to say it's perhaps more complex as an institutional investor to have the same sort of view, because essentially we are relying on a lot of our underlying investments and the underlying companies that we invest in to be transitioning and working towards a net zero target, if you like. That doesn't stop the fund making that commitment itself, but I think it just needs to have eyes wide open in terms of what that really means and how achievable that is over a time frame, whatever is agreed. But nonetheless, in conversations with the chair, there is a view that the fund needs to make that commitment. A lot of others have now, and so part of the work that we're looking to undertake as part of this review will be to almost give us some more insight into how we may be able to go about that if and when the commitment is made. LGPS pooling, this is quite a topic of itself, to be honest. There's another item on the Wales Pension Partnership, so I won't dwell too much on that for now. But essentially, that's a collaborative effort of the 8 LGPS pension schemes in Wales to work with a lead or a partner that actually can procure and identify investment sub-funds on our behalf. The intention, and this was a government initiative, the intention is to establish economies of scale and generate fee savings from what we pay the underlying investment managers. It's fairly well established now, I would say, particularly in Wales. As I say, we're 67% of our assets, 67% of that 3.8 billion of assets we have are managed through the Wales Pension Partnership. In order to progress the sort of remaining 1/3, there's still a lot of work to do, and also it's about making sure that what we have already is still working for us in the same way we would challenge investment managers outside of that Wales Pension Partnership arrangement. Impact investment, this sort of comes back to some of those private markets, particularly sort of infrastructure and real estate, thinking about how we can deploy capital, deploy the assets that we have into areas where not only are we expecting to generate an investment return, but also a positive return on society, whether it's a UK-wide benefit or more local to home in Wales or even within the Gwent region. Increasingly, institutional investors are investing on that basis, and actually the fund has got some good examples of where we've been quite effective in achieving that as well. And so that's quite positive, but an area that we're looking to extend in the future. The second section is far more technical in nature. I probably won't cover these in too much detail given time constraints as well, but I think it's just to demonstrate really that this is quite a comprehensive investment review, largely led as officers with the support of our advisors. But critically, as I said at the very start, one of the major roles of the Pensions Committee is to agree and to set the investment strategy. And so I think the conclusions of the work that we're carrying out will come back to this forum for consideration and approval in due course. And at the moment, we're sort of targeting September, so the next meeting as the best place for that. I think I've probably captured everything, but bottom of page 36 into 37 just covers the next steps. I say we've commissioned some modelling work, which is external. We're due to see the initial results of that in the next couple of weeks, perhaps even in the next week. I think that will help us in terms of progressing our next steps. We've also got, and I should have mentioned this earlier on, in terms of the governance, you've heard from some of the members of the pension board who have an oversight role of the functions and the administration of the scheme. We've also got, and it's a non-formal group, which is the Responsible Investor Working Group. And that's essentially supposed to be a sort of sounding board and almost an opportunity for officers and advisors to discuss some thinking and then sort of think about how we translate that into a decision for the Pensions Committee. And that group is made up of Pensions Committee members and Pension Board members, so we kind of get a good blend, and we invite our advisors in. So some of the work streams mentioned in paragraphs 4.5 and 4.6 will also be considered specifically by that group between now and the recommendation, which, as concluded in 5.3, is intended to be September. So I think that's probably it. Appreciate that's a bit of a long-winded explanation, but hopefully that's helpful, and happy to take any questions on that.
Okay. Thank you very much, Alex. There are 2 points I'd like to take up and clarify, but before I do so, I'll go online first, whether Councillors Gordon or Haller have any questions or comments.
Nothing from me, Chair.
Nothing from me either.
Okay. Councillor Best? No, okay. Information overload. And then actually this is the opportunity, if any of the board members have any reflections on what Alex said, I'm happy to take them.
No, I agree with everything said so far.
Okay, this was a quick meeting. Okay, so the only things I wanted to point out is a bit more for clarification, going back to paragraph 4.6, I think it is. So this is which Alex raised about, I think 4.6D, about climate change and net zero. I think what we are looking at is, obviously there is a difference between the Council's ability to issue a date where it will be carbon neutral, and as Alex said, it's a much more difficult proposition for us to actually say with 100% accuracy that we are going to be divested of all those liabilities by a certain point in time. What we are discussing, though, is actually, because obviously it's part of the conversation about then keeping one's investments with some carbon-heavy investments, is that one has that relationship with those companies and can try and push for some behaviour change so they themselves would actually perform better and stand up for what they should be. There is a limit to that, though. I think what I found quite interesting in the last 12 months is the reality that one can forever be hanging on, talking to some companies, hoping that the engagement is going to get you to a better place. So I think what I've suggested to Alex is that as we go through the investment strategy, it might be quite useful if the fund starts to publish what we think a framework towards divestment might look like. So we're not actually just putting our finger, licking our finger and sticking it in the wind and working out what date we think is politically viable, or where there is greater, or where some campaign groups want us to be, but to show that we are thinking about it and to work out what that framework would look like, so actually we can be transparent in actually how we're taking it forward. And that point about F on the impact investment is just to flag up. This is becoming much more of a small p political issue, as I think both major parties in the UK and abroad are having conversations about where do you find money in a time of slow to no growth, and indeed at home in the UK where we're getting to the point where we're most highly taxed point since the Second World War. But actually, if you are going to get to a point where we wish to see sort of improvements and attempts to sort of rebalance regional inequalities in the country, it's a conversation about how some of the monies inside the pension funds can be used much more strategically to further medium to long-term economic goals. I think that's something we're very much alive to and are willing to start having a conversation to tackle that with a bit more rigour than perhaps we have done hitherto. Did I say anything there I shouldn't have done? Good, great. Okay, then thank you. Moving on, members look to the page 37 then, paragraph 6, recommendations. The recommendations are that we note the contents of the report and then provide any comments on the proposal set out. So I think I'm happy that we've commented as such. So members, are we happy to note the contents of the report? Agreed? Yep.
Agreed.
Alfie? Excellent. Thank you very much. We can move on. But before we can move on, I'm afraid we have a technical issue. The laptop that we are running the meeting off has to restart, should install something, and it looks like we've tried to snooze it so many times before that we're not allowed to snooze it. So I'm going to call the meeting to close at the moment. It's 10:40. Please bear with us, those online. We'll drop you a line to let you know when the computer's back on. So with that, I'll declare a pause to the meeting. Thanks.